The title of our seminar today begins with the words, "The Future of Corporate Reporting." And therefore, I thought it would be useful to maybe share this quote, which I think brings together the themes of our seminar today, which is a quote from the two chairs of the standard setting boards that form part of the IFRS Foundation, the International Accounting Standards Board and the International Sustainability Standards Board, Andreas Barkhoff and Emmanuel Faber. And in this quote, I think there are really three things that I would highlight that I think are relevant to our discussion today. First, this commitment to high quality corporate reporting. You know, we hear a lot about the alphabet soup, about too many disclosure standards, too many frameworks. We hear a lot about cost, the cost of disclosure, and concern about the rising cost of disclosure. And what at the IFRS Foundation we're seeking to do, and I'll explain how we're doing it, is really focus on more efficient corporate reporting that meets the user's need and that really does drive high quality corporate reporting. The second point that is included in this quote is the point about connectivity, the connectivity between the financial disclosures and also the sustainability related financial disclosures. So that's the information in the account that's used by accounting standards and information that arises from the use of sustainability disclosure standards and the need for connectivity between those buckets of information. And then the third piece that I would just highlight is how, in order to improve the quality of corporate reporting and in order to achieve that better connectivity between the financial statements and the sustainability related financial information, how integrated thinking and integrated reporting can be a really important way of driving that connectivity and driving that improved quality of corporate disclosures. And we're going to share with you how we believe integrated thinking and integrated reporting are a good foundation for the adoption of particularly S1 and S2 information and sustainability disclosures. And I want to start by saying that, we meet today, and I'm going to go slightly off script here, which is because I think we're meeting at a time of global instability, aren't we? Let's be honest. And we're meeting at a time where there's concern about the terms of trade, there's geopolitical uncertainty, and people are beginning to question once again, whether the established world order is going to stay intact, whether the norms that we've taken for granted over the last few years around globalization and the need for, global supply chains and so on, whether those norms are being questioned. Even the science of climate change, is being questioned. And in these times of difficulty, and we've been here before with the global financial crisis, with the first Trump presidency, with COVID-19, what happens at these times of crisis is that our horizon narrows, and it's natural we go into survival mode. We go into survival mode in our own lives, we go into survival mode in our own businesses when we focus on the short term. And I think one of the challenges with doing that, and it was really highlighted by an investor who spoke with us recently, is that quite often these periods of dislocation, which we're going through at the moment, are temporary, and the bounce back is fierce. So the pullback back to established global norms, needing to really think through your risks and opportunities as a business and be able to explain that. The rapid rebounds back from these periods is often quite stark. And the really important thing is to be prepared for that. Be prepared internally and be prepared with your corporate reporting, with your external corporate reporting and the way you're making decisions within your business. And I think integrated reporting and integrated thinking are tools that help to do that. And I think the standards that we've developed at the IFRS Foundation, and particularly the ISSB standards that I'm going to talk more about, I think really do help to provide that grounding. Because I think what we're finding is that political models and political cycles are not necessarily the same as business cycles and economic cycles. And where they come out of sync, we can often make decisions that aren't necessarily in the long-term interests of ourselves or the organizations that we work for. And while history might not repeat itself, as Mark Twain said, it often rhymes. And so I think there's a lot that we can learn from those previous crises that we've been through, or challenges that we've been through, and prepare better for what will come in the future. And we hope that our standards and frameworks and all the guidance that we provide and support will help us to navigate through what is undoubtedly a turbulent global economic time. And what we're trying to achieve with the ISSB is a global baseline for sustainability-related financial disclosures. So what we're talking about with the ISSB standards is information that is relevant to investors. And we're asking companies to disclose all their sustainability risks and opportunities that might be expected reasonably to have an influence on an investor's decision-making. So how does that information affect your cash flows? How might it affect your access to finance? How might it affect your cost of capital? So really thinking through those risks and opportunities and how they affect your financial performance. And I think language is really important here because, we talk about climate risk, we talk about sustainability risk, but at the end of the day, we're talking about what accountants and finance professionals have been doing for generations, and that is identifying key business risks, being able to quantify them, measure them, disclose them, input them into your strategy, and then decide how those risks and opportunities are going to shape the future of your business. How are they going to affect the products and services that you develop? How are they going to affect your future financial performance? So this is about really thinking through what are your key business risks. And when it comes to sustainability risk and opportunity, we've got the support of the global securities regulators, IOSCO, and also we want to ensure by having a global baseline that the information that we provide or the information that companies provide is verifiable, that it's reliable information that investors can rely on, and that therefore the information and the standards are assurable, because ultimately that will provide confidence and trust in the information that is provided. And another commitment that we've made on this whole issue of efficiency in reporting and the cost of disclosure is we are rationalizing the standards and frameworks in the market. And we've begun by the consolidation that occurred a couple of years ago with the Value Reporting Foundation and the Climate Disclosure Standards Board, and also with TCFD by embedding the Task Force on Climate-Related Financial Disclosures key recommendations into our standards. We are really rationalizing and making more efficient the sustainability disclosure landscape. Is there more that we can do? And we've just set out actually an MOU last week with TNFD, the Task Force on Nature-Related Financial Disclosures. Is there more that we can do in this area? Of course there is, but I hope this is a start and a demonstration of our commitment in this area. And I also think that it's important to say that in identifying a company's key risks and opportunities, we really believe that the interests of investors are inextricably linked from the needs of society and the environment. So as you're thinking about sustainability-related risks and opportunities and how to disclose those issues and measure the impact and share that with your investors, we know from the evidence that we've got from companies that have adopted sustainability reporting around the world, including in Malaysia, that these disclosures are relevant to other stakeholders as well, including your suppliers, your customers, but also critically your employees and future employees. So in this war for talent, being on top of your sustainability risks and opportunities and how to disclose that information can actually be a key differentiator and a competitive advantage when it comes to attracting talent in your industry. And in addition to achieving efficiency in our reporting landscape through consolidation, we also recognize that while the ISSB standards may become the global baseline, that there will be jurisdictional-based requirements that will meet a need of a particular country or meet the regulatory or public policy needs of a particular country. But what we want to do is make sure that our standards are interoperable, are consistent with, compatible with those jurisdictional-based standards. And in particular, we have been working with the European Commission and with the EFRAG, which is the body that has set the European standards, the CSRD and the ESRSs, and we have developed an interoperability guide that should help companies to really see how there is great consistency between the ISSB standards and the ESRSs. Because what we want companies to be able to do is adopt our standards as the global baseline, for that to be consistent with the ESRSs. And then there will be some additional requirements that meet a different stakeholder need and a different threshold that will be in addition to the global baseline across the world, including in the European Union. And we've worked really hard with European standard setters and policymakers in order to achieve that consistency. And our commitment to interoperability is absolutely critical to the work that we do. I mentioned that our standards have been endorsed by international regulators, not only by IOSCO, but also by the Financial Stability Board. And in fact, the FSB said to us that they would like us now to take on the monitoring of the use of TCFD, now that TCFD has been embedded within our standards. And so just a reminder, and I'm not going to go through the standards, but the S1 is our general requirements standard. And this asks for all material information about sustainability-related risks and opportunities that occur within the business that meet an investor information needs. It applies that TCFD architecture, the 4 pillars of TCFD, to the standard. And it also requires industry-specific disclosures. And this is because investors tell us that they really value, in order to have comparable information and consistent information, that they really value seeing that information on a more specific than a generic basis. And we really want to be able to compare apples with apples. So companies in a particular sector, in a different jurisdiction, they'd like to compare companies in the same sector. And so we've got those sector-specific disclosures, the SASB standards, that we are going to be actually consulting on certain elements of those later this year. And then S2 is our specific climate-related disclosure standard. Again, it incorporates TCFD. The information is there to meet investor information needs. This standard must be used in conjunction with S1, because S1 sets out general principles and concepts like connected information, like the philosophy behind all of our standards. And so it's not that you pick one or the other. They do go in tandem, and they must be used together. And again, S2 requires the use of industry-specific disclosures. And here I would just say that embedded within the standards are some important principles that go to the heart of really the philosophy of the ISSB, which is not here to impose some top-down requirements on companies or to catch companies out who maybe haven't developed the skills. Pauline was talking about the skills or capabilities. But actually what we've done is we've adopted the principle of proportionality through the standards. We're giving people and organizations and jurisdictions time. So we have got transitional reliefs that are built into the standards, for example, on Scope 3 emission disclosures. And also guidance is built into our standards to help companies to identify the key risks and opportunities. And we're going to do more work, and have been doing more work, to provide guidance, information, webinars. And we have a whole section on our website dedicated to resources to help companies to implement S1 and S2. And that's really important. It's our knowledge hub, our ISSB knowledge hub. And they're really practical. And they take you through, for example, how to move from TCFD, if you're using TCFD at the moment, and how to use S2 if you're already using TCFD. So there are really useful resources that will help in a very practical way to implement and use our standards. And I just repeat, that principle of proportionality embedded within the philosophy of the ISSB. And we recognize that to implement our standards effectively, just like implementing integrated reporting effectively, is a change management process. It requires a commitment, and it probably requires a commitment over a number of reporting cycles to really build in that continuous improvement in the quality of those disclosures. And we're here to help and support jurisdictions, help and support the market to improve the quality of the implementation of our disclosure standards. And we're delighted as well with the number of jurisdictions in just a few months, really, since we've engaged with jurisdictions on the endorsement and adoption of our standards, that we now have 22 jurisdictions that have finalized their approach to how to embed S1 and S2 within their local regulations or standard setting, and another 14 in process. And I think you can see Malaysia and Singapore on the left-hand side there, and then you can see other jurisdictions in Southeast Asia, for example, Indonesia and Thailand and so on the right-hand side, those in progress. But we're delighted with the conversations that we've been having and the work that we've done in detail to make sure that we've got real alignment between the global standards that we've developed and how they have been interpreted for different jurisdictions. So how does this, in the final few minutes, how does this all relate back to integrated reporting? And why is integrated reporting such a useful way of thinking about bringing together this information in a way that's useful to investors, brings about greater efficiency, and uses that idea of integrated thinking that breaks down those internal silos, gets operational units and operational functional departments working together and talking together so that you have one strategy, one message, and avoid all the duplication that happens, all the silos and all the inefficiency that comes with those silos that we know, occur. How can integrated thinking just help to break all of that down and help come to the point where you can use our standards in a really efficient and effective way, and that leads to one narrative, one story of value creation for your business that can help you to develop a strategy. So how are you allocating resources within your business model? How are you creating value? And then how does all of that relate to a higher quality engagement between your company and your investors, your company and other stakeholders who are critical to your ability to create value, to sustain your business over the short, medium, and long term? Well, the first thing to say is that the integrated reporting framework has a new home. It's in the IFRS Foundation. It is jointly owned by the IASB and the ISSB. You may remember this was a framework that was developed by the market, for the market, over 10 years ago. It is now part of the resources and materials of the IFRS Foundation. And the IASB and ISSB have been working to build on and use the principles and concepts of integrated reporting in their standard setting work and in their technical work, so that the principles really do just flow through all the standards and other resources of the IFRS Foundation. And that commitment is there from the two boards and the two board chairs. We've been working with the IASB on making sure that there is much greater alignment between the management commentary, practice statement, the MD&A disclosures, and the integrated reporting framework. And the boards have said that they are committed to a long-term role for a corporate reporting framework that builds on the principles of the integrated reporting framework. And we've seen that since the consolidation of the Value Reporting Foundation into the IFRS Foundation in 2022, even though so much of the energy of our organization, including me and my team, has been on the development of and the promotion of S1 and S2, our new sustainability disclosure standards, we've seen in the Asia Pacific region an increase in the number of integrated reporting adopters and also references to integrated reporting in corporate disclosures, as I think it is becoming clear that we need to avoid two separate pillars of disclosure, the financial statements and the sustainability related financial disclosures. And we do need a framework, an architecture, a set of principles and concepts that helps to bring together this information so that companies can communicate that single story of value creation, that single business model, that single strategy. And I think if I look now just at the resources, finally, Pauline and Simon, that we have developed that can just be helpful, and I won't dwell on these because we will share these slides afterwards, but what are we doing to help companies to really understand how other preparers around the world and in Malaysia are using the fundamental concepts, the guiding principles, the content elements of the integrated reporting framework, and how are they using that in combination with S1 and S2 disclosures? So in other words, how are companies using S1 and S2 disclosures within their integrated report? Because we know companies like to see examples of other companies, maybe in their sector or in their country, to see how they're adopting these principles and practices. So we've relaunched our examples database now within the IFRS Foundation. And over time, as we build up a body of evidence of companies using S1 and S2 and using that within the integrated reporting framework, or using the integrated reporting framework as a location for those disclosures, we will populate this examples database with those companies' reports with explanations of why we think they're particularly relevant to help companies along that journey to adopting S1 and S2, but doing it in a way where the integrated report can be a useful location. The integrated reporting framework is already reflected in the work of the ISSB. From the very beginning of S1, where it talks about that inextricable link between the interests of investors and that of society and the environment, that is taken from the philosophy of the integrated reporting framework. But then I think if you think of connected information, if you think of resources and relationships, which are essentially the capitals, so many of the ideas in S1 in particular, but through the S1 and S2, ideas and concepts are taken and used from the integrated reporting framework to build that consistency and to help companies that are using the integrated reporting framework already to begin using S1 and S2. Why is integrated reporting and the integrated report, a useful location for sustainability related financial disclosures? Well, because it really is a well-structured architecture. From the moment you think about those capitals and the interrelationship between those resources and relationships, and how that builds into your strategy and your business model and your future performance, you understand how sustainability related risk and opportunities should be part of an integrated form of disclosure about your company, its strategy and performance. And quite often companies will already be using the accounting information in their financial statement information in their integrated report to communicate their financial capital performance. So this is a natural evolution to use ISSB disclosures in the same way as in your integrated report. And it helps to build that comparable, consistent information for investors that can be assured in the future to provide that trust and confidence to the capital markets. And just as we've built guidance into the standards, just as we've got our knowledge hub on the ISSB's website with rich resources available for companies to begin using and experimenting with our standards, we have developed a mapping tool that maps S1 and S2 to the integrated reporting framework's content elements. We have developed FAQs to get companies started. We've been around the world asking what are the key questions that you would like to ask, and we've put them in an FAQs document, and we've developed a getting started guide that includes how to get started using S1 and S2 and using the integrated report as your location. Similarly, the ISSB has issued a guide on material information, which again can be really helpful as a companion to the integrated reporting framework. Finally, I just want to leave you with what is to come. What is to come from the ISSB? Well, at the moment, the ISSB is moving to the second phase of its research project on 2 projects: biodiversity, ecosystems and ecosystem services, and human capital. And what we have found already in the research that we have conducted in both of these areas is that investors value disclosures on these issues, but there is currently inconsistency and poor comparability in the way information on biodiversity and human capital are disclosed. And so we're now moving to the next phase of our research, and we will really want to engage with stakeholders across the ASEAN region to really help us, or help the board to decide whether standard setting work is needed in this area of human capital and biodiversity, given the investor interest and given too that inconsistency at the moment in the disclosures on those 2 areas. I mentioned the Knowledge Hub. I would encourage you to have a look. Our FAQs are on there. The guide that I mentioned, the mapping tool showing how S1 and S2 fit with the integrated reporting framework, and our Getting Started guide are all there on our website on that knowledge tool. And as I said, partway through my presentation, we will also be improving the examples database as we get good quality, high quality examples of companies using S1 and S2 and using the integrated reporting framework as a location for those disclosures. And we also believe, final slide, that integrated thinking really is the enabler for the adoption of integrated reporting, integrated thinking, S1 and S2, because it allows the preparer to really think across the business. And here the finance professional, typically the CFO, but often it is the finance team, that leads this process within a business of integrated thinking, of bringing together the different operational units, identifying what the strategy is, what is the business model, and then bringing that information together to ensure the company is able to tell one holistic story of value creation that we know is good for the business, is good for the user, but ultimately coming back to those geopolitical challenges that we're facing today, is good for sustainable development and financial stability in the world. And surely these are the kinds of tools that are needed now more than ever. And it's a pleasure to be able to introduce this seminar today, and I look forward to participating in the discussion that follows. Thank you very much.